This is Eric Mother.com with a weekend market analysis for the weekend of May 18th and May 19th, 2019. Let's take a look at markets here with about 2 minutes to go. Let's take a look at where the markets might be closing. A very volatile week for sure, and also a very volatile day. Let's take a look here. S&P 500 for the week, just about to close here for the week, down slightly, about 0.6%. For the week, the Dow is down also slightly, let's call it about 0.6%. And for the week, the Nasdaq is down about to close down for the week about 1.2%, give or take. Now, if we go back to that S&P 500 chart, we can see as of Monday's close, markets were trading somewhere here. At the highs of Thursday, highs of the week, the market was here. So this market did give the traders on both sides of the argument, the bulls and the bears, something to take away. So everybody got something, which is not something strange, to be honest. It's an options expiration week. So we do expect some type of volatility, and the market held true to that. Here we are about to close for the week. There is a closing bell. We'll let the numbers settle out. So let's see where the S&P 500 is closing, because based on our analysis from last weekend, we can take a look at the breakout level based on 2018's January closing high here. And let me give you that number one more time here. So going back to January 2018's monthly closing high, level to watch, there's 2872.87. And I was suggesting this was a good guide in terms of pretty much trying to understand where the market is trying to go, because we can see here there was a good breakout, market held above that, found support here, held above that until it broke below that level here. And then of course we did experience that drop towards late 2018. We came back. Ultimately we break out here for a couple weeks. And then we can see now we are failing. So this, if it continues being the case, is a sign of a market that might be testing lower lows in the coming weeks. Now keep in mind also there's a backdrop story here, which is the fact that the prior 2018 all-time weekly closing high, we can see here, this breakout attempt did fail. And because of that failed breakout attempt on the weekly, if you go to 2018's weekly closing high, that becomes a problem, something that in time we can look back and say, that was pretty obvious. Once we failed to hold above 29.67, which is this weekly closing high here from 2018. So already we do have a failed breakout here. And now this would be a second failed breakout if it continues trading below this price. So as long as we're below this price on a weekly basis, the market is looking suspect. If the market is to recover, then obviously the first order of business would be to take out or to move above this price. So anything below this, net is bearish. Anything above this price as a guide would be a sign of a market that is recovering. So even though we had a red flag because of this failed breakout here in September of 2018, before this drop, keep in mind the big move came only after we failed to hold around the 50-day moving average. So right now, even though we have failed daily breakouts, the market is still to decide whether it wants to stay below the 50-day moving average or whether it wants to hold above it. Of course, bulls would like to see the market bounce and hold this area where we have this upward sloping 50-day moving average. And bears would like the market to stall and start pointing down from current levels. So again, using the 50-day moving average as a guide, is also one way to look at the market health. What market bulls want to see is the market moving above this recent trend line and move higher. So that would be a trigger for bulls, and those looking to initiate fresh short positions can wait to see whether the market can break below this price trend line. Movement below this price trend line would be a sign of a market that is due to test, at the very least, the 200-day moving average. So using that or those trend lines could be an easier guide as to what the market's intent is going to be here in the coming days as we begin a new week and for the rest of the month. Above the price channel here is net positive, and a break below that level, of course, as we have established, will be a net bearish development. That concludes the free portion of this video. The rest of the video is for paid Muadhi.com subscribers. Do enjoy your weekend. For subscribers, let's continue on.